Good afternoon, everyone, and welcome to today's session and live market analysis for the 19th of January. Today, I want to focus on a few things, fundamental analysis, looking at some seasonal patterns, technical analysis, some recent trades, and the outlook for the week ahead. Very interesting stuff happening today. A lot of different news announcements currently happen as we speak, actually, with Governor Carney speaking. So really want to have a look into that and have a look at some of the comments and how prices are reacting, which should give us some clues in terms of what's going to happen over the next week or so. So some key announcements have already taken place. We had China GDP come in just as expected, slightly lower, 6.8% versus 6.9%. Of course, that's if we can trust it. The Chinese data is highly known to be manipulated. In any case, that is the data, and it does show over a longer term trend. If you look at over a 5-year trend, that the Chinese market is still growing, although just at a slower pace. Sticking with commodity theme, we have the Bank of Canada rate announcement on Thursday, and that's very, very important because right now all the flows are happening in the commodity currencies. Euro is flat, pound is very oversold. Really, no one wants to take positions on those currencies, and really they're just reacting to the flows in the cross pairs like Euro Oz, Euro New Zealand, Pound Oz, etc. So the Canadian rate announcement on Thursday is going to be very, very important, and we can expect to see a lot more volatility as we have been seeing. But I think it might be quite range-based up until we get to that day. They are widely expected to cut, so just be careful of the covering of those short CAD positions. And we've seen a bit of that today with dollar CAD coming down. A lot of people will probably just want to start banking some of their profits in anticipation of this event on Thursday. So have a look at those flows going into an announcement this coming week. In terms of the Eurozone, it's been quite interesting because we've had some good data. German ZEW economic sentiment is coming at 10.2 versus 8.2 expected. So obviously that's a great bullish sign for the German economy, and then obviously the Eurozone economy as well. And we've also got CPI, consumer price inflation, in line with expectation. So generally this week we've had some decent Eurozone news come out, which is positive for the euro. Supposedly positive for the euro. I say that because the euro has just gone flat, really, and not really reacted to these kind of news announcements. And obviously that's very interesting in itself, and that's something that we'll look at just in a few moments. But UK is where it is at right now. We've had some pretty good data come out. CPI Apologies for that. Usually when there's a mobile internet provider van outside, the internet connection usually goes. A very stable internet connection. I've got backups, as all traders do. So just had to spend a few moments getting it on. Very sorry about that again, but sometimes these technical things do happen. So as I was saying, we've had some really good data that has come out over today and over the past week, but the market has failed to bounce. So we've had good Eurozone data, and we've had some good UK data as well. Right now, Carney is doing a keynote speech, and he's just said something that's quite significant in the markets, saying that now is not the time to raise rates. So clearly a very dovish stance. He also expressed the fact that he believes that the UK is more prone to weakness in the global economy than, say, the United States, which is obviously very key as well. And I'm just obviously reading the highlights on my mobile phone here, actually, because obviously the internet connection has gone down. So we'll have a look at the price action about what has been going on in a few moments. But we've had good data, but the market has reacted in a very strange way, and really price action tells the story. So I'll have a look at seasonals in a moment. I'm just going to jump over to the charts and have a quick look. And what you'll see here on British pound against the US dollar, if I just take this to a higher time frame, as lower time frame, let's look at a 1 hour chart. So we had some bullish news out in the morning. CPI figures came in as expected, RPI figures as well, and we also had PPI. But the pound rallied, as you see. This is the 9 o'clock bar. The pound rallied up into the 1.4340 level, but it failed to make any type of gains whatsoever. It pretty much gave back everything that it gained. So obviously that's a very, very bearish sign. That's even before Mark Carney started to speak. That was a very bearish sign. And obviously now he's come out on the wires and the market has just sold off. So we had good news out. The market didn't rally. Obviously we've had negative news out and the market has fallen off. And that is obviously telling us quite a bit about how the market is positioned. It's going to take a lot for the market to actually rally up. It's going to take some significant news announcements for the market to move higher, or what I like to call significant liquidity runs. So they're really going to have to take out people's stop losses and things like that for the market to actually turn. And I've been a long advocate of playing pound shorts, as you'll know from last week. We looked at the seasonal data, which helped us get into some of these pound shorts, and also take them against some of the cross pairs. But we've had some bad pound data out. If we look at euros, the euro's been quite interesting as well, because the euro, even though it's been going flat, it really did have some positive data up, but again, it could not rally. I think we're just seeing a rally here based on the pound weakness and the euro pound crossway, as you'll see here. So euro pound has just shot up, but that's really to do with the pound news rather than anything euro related right now. So with euro, I think it's going to take a lot for it to move higher. Right now, is this really where you want to invest your time and money? The market is going sideways. Again, a lot of people will say, well, it's due a massive breakout, but really there's so much else going on that don't really want to be involved in something that's just really going sideways. So that's happening with the euro right now. With some of the cross pairs, which is what I believe most of the action is, as you can see from the euro chart, it's not really doing anything. But we talked last week about British pound against the Australian dollar based on the seasonal patterns, what was setting up. And based on the seasonal pattern, we took a short position here based on the 50 moving average and the 100 moving average, so the technical information, of course. and information, which again we'll have a look at in a few moments. But we've also the market has come off today as well. We've had a really risk-on environment. Aussie's going up, Kiwi's going up, even stocks are going up as well. But right now we have pound Oz going down, and this is a play that we talked about last week. It did take a little bit of heat. Again, some people may have closed out the trade. That's fine. But I do see further bearishness here. If we look at the weekly chart, potential targets for this trade really up into this high here, and the big round number at 2.0. So, we've really got some decent momentum here. That, of course, if the Aussie Australian dollar is likely to continue higher. Right now, we've just done some short covering. I probably see maybe tomorrow another day's worth of gains potentially, but I think the commodity pairs will be just going a little bit sideways until we've had more clarity from the Bank of Canada on the Thursday's news announcement. So that's obviously something to watch. But I do see potentials in the pound Oz trades as we talked about, and I'll look over the seasonal patterns just briefly with you again before we do we recap here. Pound New Zealand as well. If we look at pound New Zealand on a longer term basis, it does seem that it will at least want to go and test the last week's low. You can see last week had a high test, or pin bar reversal, or even a doji if you want to call it a doji. But it seems that in the market will at least want to go and test this low here. And if it does break lower, then the next support is that beautiful horizontal there at 2.0990. So those would be potential targets for that for this trade. And if we look at the daily chart here, we can see we've just put in a good technical bearish formation. We had a bearish engulfing bar, followed by an inside bar. It's just broken through. Fantastic. We've also taken out the stops off this high test bar here, which in this market, it's because of the, I would say, low liquidity, and that might sound a bit crazy because we've had some very volatile markets. But what I mean by low liquidity is the fact that we've had positive news and the market has failed to rally on positive news, which tells me that the market really does not want to get too heavily involved to the long side or the short side because of the volatility that has just happened. Markets, people are probably going to be on the sidelines for now. So I see further bearishness in pound New Zealand and pound Oz, and this is something obviously we discussed last week, but based on new evidence as well, that is also the case. Now, even though Mark Carney has been bearish, we've got to be careful with the pound. We are approaching some significant levels onto the downside, where the market can easily bounce. And obviously this is a monthly chart, but it seems as though we at least probably want to go and test this 1.41 level, if not the lows below that as well. So that would be something, and that's why I've tried to play the pound against the commodity pairs for now. Again, just matching the strength and the weaknesses. If we look at some of the other major pairs, so if we have a look at dollar yen, for example, so with dollar yen, really we should expect some more bearishness up until these levels, this level here. So I'll just put this a little bit higher. This level here will at least want to get tested at some time, just above 116. And it's been tested so much that it probably will want to be tested again, but we're probably looking at some type of retracement, maybe up to the 20 or the 38% retrace before it does move lower again. So I do see dollar yen lower, but we are overdue a rally in most of the pairs that we're looking at right now: Aussie, Kiwi, and dollar yen itself. And this is really based on the seasonal patterns as well that have been setting up. So as I talked about last week, we can see some further bullishness coming into the euro. That hasn't happened yet. January typically is the worst month for the euro, and it's probably why it's been going sideways, because no one wants to take it long, but no one wants to take it short either. So if it can't move to the downside, which is what everyone is expecting, it's probably going to move to the upside, because the market likes to do the opposite of what most people think. But we do see some further bullishness coming in February, March, April. But really here, the yen weakness, so on average, the yen tends to be weaker in January and February. We're starting to see a little bit of that playing out with the short covering rallies we've experienced in dollar yen, for example, and some of the other cross yen pairs. So I would expect to see a little bit more of those rallies, especially up until Thursday's news announcement. Before we potentially resume the trends that have taken place since the beginning of the year. And again, commodity pairs, I see probably going sideways. Again, due a rally, April tends to be the best month for commodity pairs. But again, it's all about how the market is positioned. Right now, everyone is short risk. Everyone's short Aussie, short Kiwi. And most people want to be short those pairs as well, especially the euro. So we've got to understand how the market is positioned in order for those trades to take place. Most people I know are calling euro long. Yeah, if you look at anyone's doing webinars or reports or whatever, most people are calling euro long, probably at least up until the 200-day moving average, and that is fine. But right now, if everyone's calling it long and everyone's looking for a long position, how's the market going to get there? Because if everyone's going to go long, someone needs to be selling those euros, right? So again, this is why it's the best environment to play low liquid plays and look for those stop runs before we can kind of resume those longer term trends. Something I haven't looked at actually was New Zealand dollar against the US dollar, because it is at an interesting support level. You'll see we've got this horizontal level here at 0.64. And is the market going to bounce at this level, or is it going to break through? And we've already seen a little bit of a bounce here over the past 4 days. And it would really depend how Thursdays goes, in my view. I believe we do have a dairy auction coming up at some point today as well. So that could be significant for the Kiwi. So watch that over the US session. But my feeling is that the US market, when it opens as well, because it was a bank holiday, will want to continue potentially some of the risk on environment that we've seen. Again, look at the equities and look at the indices as well in the run up to that as well, just for some indication on is it a risk on or risk off, or is the risk on going to continue throughout the afternoon? But of course, a lot of people would have bought here. I haven't bought here, even though it's a beautiful level to potentially buy on. I'm really waiting for the market to tell me what to do. I'd rather see the market, pull off this level. So it's pulled off this level, ABC retrace, that's fine, but this could be an ABC retrace in this momentum to the downside. So I'd rather see a retest off that level first of all, and some significant bullish price action before I look to initiate some type of long position. But the market is jittery right now. No one wants to be that contrarian and go long on commodities, and there's no reason why they should. But we have to be aware of how the bigger players are positioned, because they're the ones who can move the market and would potentially move the market at these stronger levels. So that's what I'm looking for here. I really want to see how the market reacts at this level. I'm not too concerned about buying it at the very level. Sometimes it's better just to wait for a confirmation. So here, for example, in November, we put a nice bullish engulfing low test bar or pin bar reversal here, rather than taking it long straight off that level, because it could easily just take the high out, set up as a bearish engulfing and break the level and continue on a downtrend. I'd rather wait for another opportunity for buyers to get in. So here we've got the train chart reversal, we've got the bullish engulfing bar here. Okay, you're getting into the trade slightly later, but your risk is still defined. as most people do. They'll trade on the break of this high here with a stop loss here. But you could do the same here as well. So the risk is the same, and the reward is obviously up until this next level of resistance. So, there are opportunities if you are patient, and that's the most important word. You've got to be patient within this market, especially because we've had such significant moves. And some of you, from a trader psychology point of view, are probably feeling frustrated. Some of you are feeling overconfident because you've had a great run. Some of you are feeling more anxious because you feel there's a lot going on, and you're not positioned. And a lot of these emotions are being replicated in the market, which is why things aren't bouncing on good news, for example. And key markets are going sideways because, again, the market is filled with a lot of emotion right now based on the volatility. So really, it's just a game to be patient. Wait till you see that confirmed trend. Is the market going to break? Is it going to bounce? And then position yourself accordingly. If we just take another look at pound, actually, because that is going a lot further. So again, pound would be one of the players. Look at the news announcement tomorrow. If that comes in, it's going to have to be a blockbuster news announcement for the pound to start moving higher on it. But it could be an opportunity. If it is a bullish announcement or positive announcement, it could be an opportunity to start banking some of these pound shorts that a lot of people have. If it is disappointing, then really that is an opportunity to get short again, and really run it to some of these levels here that we talked about earlier, because it seems like the market may want to get to those levels to then turn around, because you can imagine all the different stop losses that a lot of different hedge funds and big institutions have here from the people who bought this dip. So the market would probably want to go and test those levels just to see the resolve of the buyers and sellers within the market there. So just having a quick look as well at the seasonals. So we talked about this last week, but it's very important to understand what is happening. And when you have all three things lining up, your technicals, fundamentals, and seasonals, then that really does make for a great trade. And right now, not everything is lining up with fundamentals and seasonals, and it's very important to then just concentrate on trading the technical charts. Okay, so as a quick recap, so the markets haven't been moving on good fundamentals. Okay, so that is telling us that market position is very, very key. I think we're due to be range bound for the rest of the week after such strong moves, but we do have some key announcements coming up in British pound tomorrow and Bank of Canada on a Thursday. And I talk about those pairs because commodity pairs is really where all the action is right now, which is affecting the flows in euro and the pound and the dollar and the yen, actually. So the volatility has hurt a lot of people. So they're on the sidelines. And again, volatility has created a lot of overconfidence in the market as well. So we may see a lot of things run unexpectedly. But I think what we're going to start seeing some unwinding of positions. And as an intraday trader, you really want to focus on running stops in this low liquid environment where everyone is already fully positioned. And what I mean by running stops is look for the price failures. Look where other people are positioned and trade at those levels, because that's really where the liquidity is going to be to generate any type of moves in a direction. From an end of day perspective, for you position traders out there, focus on the structural retracements. Prices are retracing today, and typically retraces happen over 3 bars or 3 days. And you really got to be careful about these retracements in terms of where to get in and resume the initial trends that we've seen. And I would like to look for the structural retracement. So your 3-wave or 5-wave retracements, so your ABC, your Elliott wave type patterns. just to make sure I'm not getting in too early based on the significant moves that we've just had. Really, the focus is going to be on the commodity and the Japanese yen pairs, but I would say watch the bounce in stocks versus the euro. Typically, we've seen a correlation between stock market going lower, euro going higher, as people search for the Aussie and basically New Zealand and commodity currencies are very, very weak. So watch out for that. There's some key levels coming up on the S&P, which could affect the euro. And if the market does break those levels in the S&P, I would probably see we'll probably see some more bullishness in the euro at that time. But again, the market is probably just waiting to see whether that level will bounce on the S&P and put money in stocks, or whether to put it in the euro. But like I said, it is the time to be patient. We've got some key trends and themes that we've been focusing on since last week that are still continuing into this week as well. Watch out for the key news announcements coming up. Again, I would like to apologize for the connection timing out. I'm doing this over my laptop and my phone as a backup. And again, another learning lesson for you guys. If you are trading, always have a backup somewhere, okay? Because you never know when that time is going to come. So thank you for your patience with me, and I have access to the chat. So if you do have any questions, please do let me know. Otherwise, I wish you a very profitable trading week, and I'll see you next time. Thank you.